Now, one of the things I've been very concerned about is, in terms of the job market, is artificial intelligence and the coming impact there. We're seeing predictions by the leaders of the leading AI firms that within 1 to 2 years, a majority of entry-level white-collar jobs will be gone. And there are products that are being released to market that propose to do pretty much exactly that, and I anticipate pretty high uptake of those things to essentially eliminate back office operations in small businesses, things like that, or intermediate sized businesses. And we're already seeing layoffs in the big tech firms. Microsoft had a big round of layoffs where 40% were computer coders and maybe another 20% supervisors of computer coders. And so I was just wondering, what sort of analysis is the Federal Reserve doing about that job shock, and how is it going to affect your dual mandate when it lands, perhaps as early as the next year or two?
So I think economists everywhere are doing work analyzing the potential implications of AI for employment and some of the very things that you mentioned. And we're certainly both consumers and producers of that kind of research. And don't think anybody, I certainly can't make any positive statements with great confidence about what will happen, but there's certainly a possibility that, at least at the beginning, AI will replace a lot of jobs rather than just augmenting people's labor. Over a long run, the history shows that generally new technology raises productivity and creates new jobs over time, but it can be disruptive in the very short term. And AI, anyone who's been exposed to AI, has to be kind of stunned with what it's capable of. And you think, if you think, oh, this is just the beginning, they say that 2 years from now, the things you're looking at will be left behind by the continued development. So I think it is certainly everything you would want in a transformational technology, and I think that unknowable, but certainly to be important effects on the labor market. And I hear the same things you mentioned from CEOs, that they can see a way to significant reductions in employment, but I don't think we know that.
Yeah, but
yet there seems to be higher than expected, or certainly desired, interest rates for many of us, and I'm curious how high interest rates, they hurt Americans who are paying car loans, credit cards, mortgages. Just this morning, you had FHFA Director Pulte asking for lower interest rates, which would obviously impact home buyers as well. So what is it that's keeping, in your mind, the Fed from what many of us believe is the right thing to do, which is to lower some interest rates, and by the way, match what the Bank of Canada, Bank of England, the European Central Bank, the Swiss Central Bank, a number of emerging central banks, by the way, that's your own assessment on page 33, as where you're laying that out. Why aren't we doing what the rest of the world is doing? Is it because we're at full employment? Is it because of those tariffs concerns that you said weren't part of the analysis? Was it energy, groceries, durable goods? Why?
So you're right that if you just look in the rearview mirror and look at the existing data that we've seen, you can make a good argument that would call for us to be at a neutral level, which would be a couple of cuts or maybe more kind of thing. The reason we're not is the forecast by all professional forecasters that I know of on the outside and the Fed do expect a meaningful increase in inflation over the course of this year. When I said we weren't going to talk about tariffs and inflation, that was to say until we see what the policies are. And so now we know a lot more. It's 6 months since I said that. So anyway, I'd be happy to continue this with you.
Thank you.
Our national debt now exceeds $36 billion. Congressional Republicans have made it our mission to rein in out-of-control spending, from repealing the Green New scam, enacting common sense Medicaid and SNAP reforms, and rescinding wasteful spending. Mr. Chairman, you have repeatedly said our national debt is not currently at an unsustainable level, but it is on an unsustainable path. Can you describe what the point of no return looks like when our debt reaches an unsustainable level?
So there's no way to know exactly what that is, but ultimately, if the debt is growing substantially faster than the economy, by definition, at some point it will not be sustainable. So, we we don't have oversight responsibility over the fiscal authorities, but that's traditionally what my predecessors have limited themselves to saying, and I'll say it too.
The Treasury has our reserves, but you also have a liquidity fund, which I believe involves buying and selling foreign currencies. And so that begs the question whether, if you're allowed to buy the euro, whether you're allowed to buy cryptocurrencies. And of course, the president has said that some agency of the federal government should have a strategic crypto reserve. Do you or your successors have the legal right to take assets of the Fed and buy Bitcoin or Trump coin?
No, we don't, and we do not seek this authority.
I hope very much that your successor is not someone who tries to stretch existing statutes and come to an opposite answer.
As the global reserve currency is essential. It allows the U.S. to borrow at lower costs, which stimulates economic growth and increases standards of living. The Trump administration is actively negotiating to ensure we are no longer taken advantage of by our trading partners. At a previous Monetary Policy Task Force hearing, all of the witnesses agreed that the recent volatility in the Treasury markets did not permanently damage the dollar's global reserve currency status. Do you agree?
I do.
Thank you, sir.
Gonzalez's line of questioning. So, in addition to your dual mandate, do you believe that that preserving the U.S. dollar and the primacy of the U.S. dollar is part of your job description?
I think it's something. It's not formally part of our job, but yes, it's something that we care about, and we certainly wouldn't want to undermine that. But that's really Treasury has the primary role around the dollar. That's been the case for some time now.
Payment stablecoins are already being used for both retail and wholesale payments, as well as for settlement. Recently, this committee passed the Stablecoin Act, and the Senate passed the Genius Act, both aiming to establish clear regulatory frameworks for fully reserved dollar-backed payment stablecoins. Given their design to maintain a stable value and be redeemable for U.S. dollars, should the SEC or other regulators explore treating these stablecoins as cash equivalents for accounting or financial reporting purposes?
So let me say, I think it's a great thing that bills are moving. We need a stablecoin framework on that particular issue. I don't have a view for you. I can come back to you on that.
I'd be grateful. Thank you. High rates have also caused, as we've discussed, the cost of paying off our nation's debt to skyrocket. The CBO estimates that interest payments will cost the U.S. $1 trillion in fiscal year 2026 and continue to rise to almost $1.8 trillion by FY 2035. How do you see us continuing to be able to afford to pay off our debt at this rate? And as the U.S. continues to borrow, how does that impact your decision to keep or cut rates? Obviously, foreign countries like Japan, who are significant buyers of our bonds, have started decreasing their purchases significantly. Other internal pressures worldwide are having that impact. Are you worried about this global issue?
Fiscal policy and it really is not our job, and it's not something we take into consideration in making monetary policy. That's really elected people's jobs, and I would add that for some time now, the U.S. federal fiscal policy has been on an unsustainable path, and I'll limit myself to that.
We've been embracing and building for years, preparing for this moment. The Genius Act has now passed the Senate, as you know, and is expected to pass the House. I think that'll give regulatory clarity to stablecoins. And we've been embracing stablecoins. We've been enabling people to issue Visa credentials on top of stablecoins. We've been modernizing our own settlement infrastructure with stablecoins. And we have a whole host of innovations that we plan to deploy around the world embracing stablecoins.
Do you believe then stablecoins are going to be a significant way that people transact in the future?
Hey, David, we think there's product market fit for stablecoins in three areas. The first is the capital markets use case, and you've seen that with crypto trading, and that's true globally, here in the U.S. and around the world. But the product market fit that's most interesting going forward is outside the U.S., and there's two areas. The first is countries where you've got high currency volatility or currency controls, where people really want to have access to U.S. dollars, and they either can't get U.S. dollars or it's very expensive to do that. Stable coins provide an opportunity for people in those countries, maybe there's 30, 40, 50 of those countries around the world, to have easy, cost-efficient access to U.S. dollars. And we'll plan to give them Visa credentials on top of those stable coins that they can spend in merchants around their country or other places. The second area of product market fit is cross-border, and that can be remittances, person to person, or business to business transactions. And in both of those areas, those are additive opportunities for Visa, and we're embracing stable coins and building and innovating on top of them to provide new use cases in those areas.
Right.
I think there's a little confusion because most stable coins are US dollar denominated, people immediately think about use cases in the United States, when I think most people who studied this and are active in this really understand that the product market fit is outside the US.
Welcome to the Crypto Teacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. Also, go like and follow the TikTok. More videos to come. And we have Fair Jerome in the house. And he talks about the power of AI. And it's definitely going to take a lot of jobs. But remember, guys, Jerome Powell, doing a C word, advises that they learn that technology can replace a lot of people. Remember, the C word was nothing but a simulation for the fourth industrial revolution. Now it's time to launch the real plan. And the robots, algorithms, and drones are going to put a lot of people out of work. And we know it's going to take a lot of people to adjust, because they have to re-educate themselves. That's the reason why it's so important for you to educate yourself now. So therefore, you fall on the right side of history. And remember, the Crypto Teacher told you. And these high rates are weighing on the economy. But the main reason why the Fed hasn't moved, because don't forget, guys, we're the world reserve currency. And they printed so much money. 80% of all money in existence in 2 years. The dollar is over. And that's the reason why these stable coins are so important. But then also Jerome Powell speaks about these tariffs. And we know, guys, when it comes to the ports, these big corporations front ran it. So we're not going to feel the effect until the third and fourth quarter. And that's when they're going to do the price increases. But they know it's holiday time. So people are going to sacrifice and pay. Guys, remember, this is a game. It's a plan. It moves in phases. And this is genius work. It's ugly genius. It's evil genius. But it's definitely genius work. These big corporations already knew we were having these tariffs. That's why they got all the goods in now, where they're not going to be affected. And by the time we get towards the end of the year, small and medium-sized businesses are going to be under even more pressure. And we're going to see more consolidation that's going to really step up in 26 and 27. And remember, the Crypto Teacher told you, these big corporations are going to be able to buy up all these small and medium-sized corporations, pennies on the dollar. And these stable coins are going to help the United States hold its power when it comes to the dollar. And we see Visa. Now, guys, we know Visa, MasterCard, American Express. Doesn't matter, the big banks that were funding crypto from the beginning. And they've been integrating all these digital asset technology inside their own software. Never forget what Gary Gensler stated. The big banks are not going to allow you to take over the monopoly. It's not happening. But they will pay you and use your technology. And remember, the Crypto Teacher told you. And then we have cyberattacks just keep coming up, because, guys, we know in the fourth industrial revolution, war is no longer going to be physical. It's going to be cyber. It's going to be algorithms and drones. And that big hack is coming. Remember, all they need is that crisis in order to bring in all this technology. And we see all these countries no longer want the United States treasuries, especially this long-term paper. The only person buying this long-term paper is the Fed, and then plus the United States big banks. But absolutely no one overseas wants this long-term paper. They're about the short end, but they're definitely not buying the long end. But we know the Fed has plenty of room to cut just in case something happens, and Scott Bessent has plenty of ammunition. And especially once we get this genius bill passed, then he'll be able to make maneuvers when it comes to these stable coins. Because remember, These stablecoin issuers are buying up treasuries, but they're buying up the short end. Now he'll be able to use these stablecoins to buy up the long end and manipulate the long end. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
If foreign actors begin weaponizing treasury sales or dollar reserves, what tools does the Fed have to help preserve financial stability and the dollar's status as a reserve currency within the world?
You know, essentially what makes us the reserve currency is a few things. It is our great democratic institutions. It is that we have open capital markets, very open capital markets, and it is that we have price stability and the rule of law. Those are the things that make you the reserve currency, and you can keep that status as long as you maintain those things. Of those things, the thing that we contribute is price stability over the long run. So people who want to invest in or use the dollar, they can be confident in the value of the dollar over time, that it won't fluctuate wildly or decline in ways that, and so that's our role. Really, Treasury is responsible for stewardship of the dollar, but we have that role to play as well.
Very good. In the brief time that I have left here, I just came back from a trip to Saudi and the Arab states. Big concern here in the world we're living in right now, with Iran looking at asymmetric ways to threaten the United States. Cyber attacks have been on the rise. You got a question here earlier on cybersecurity. Help us feel confident the Fed is doing everything they can to protect us from a cyber threat.
So our part of it is the financial sector and the institutions we regulate, and they spend a lot of time and money on cybersecurity. We spend a lot protecting ourselves, and there are other parts of the U.S. government that are very much involved in making us aware of cyber issues and making sure that we're all ready. And we never sleep on this because it's always getting harder.
Thank you, Mr. Chair. I yield my time.
Committee, I'm deeply concerned about the threat of Iranian cyber attacks on our financial system as retaliation for our strikes on their nuclear facilities. In its cybersecurity report last year, the Fed acknowledged that critical infrastructure, including financial services, is at risk with rising geopolitical tensions. Iran has a history of targeting American infrastructure companies and financial institutions and banks, which could obviously threaten and cause economic damage. What actions is the Fed taking now to monitor and defend against Iranian or proxy cyber threats targeting our country's financial institutions?
So we're in touch with the other regulators and the parts of the government that work on cyber, as you know, and we're in touch with the banks to say, for people to be on the alert for things like that to happen, and also we're on the alert because we're a target as well. So you're right to raise it. It's a big issue, and
do you feel like you have the resources right now to be prepared for that?
Yes, I mean I think we do. We spend a lot, and the government generally spends a lot on these things, and but you can never ever be comfortable in this area because the bad guys are always getting better. So we need to get better.
Thank you.
Pay insufficient attention to the frightening scenario of a comprehensive cyber attack, which would bring to a complete halt to the power supply, transportation, hospital services, our society as a whole.
Not facing that right now, and that isn't really our forecast that we will face such an issue in a serious way. But if that does happen, then what we do is we look at the two goals and we see which one of them is farther from its goal. Two variables, is maximum employment or price stability farther from its goal, and we prefer the one that's farther than its goal. And then we also ask ourselves, how quickly will they return to goal? It's a very difficult situation for any central bank, and I would say again, we're not in that situation right now.
Thank you. My view is still the same there. That there was a bit of a move away from treasuries, and people are wary of that. We have still this big budget bill in the Senate now, through the Senate to the House. We obviously have this energy shock that will somewhat come through. We have tariffs, so there's a lot of pressure there under the low end that we could see higher yields that makes people wary. So this counter rally we're seeing currently may be really driven by more domestic players that were perhaps short, other technical factors. But I think the story in itself hasn't really changed. So I think we're going to continue to have this higher pressure on low end of the yield curve, really because we haven't really dealt anything away with the deficit or with inflation for that matter. If in fact, there's more risk now than anything, even though we put a ceasefire in place, it seems actually quite fragile, to be honest, oil markets could pop back easily and therefore put pressure on long-term yields. Like whenever we get a bit of relief in markets, it seems that then the economies that benefit from sort of the tariff relief or from this geopolitical relief, that those currencies rally, while the dollar is in bid. So as you saw today with the euro, for example, touching 116, the ECB has been cutting now 8 times. The economy in Europe is not that strong, but I think it's really about if there is relief from geopolitical crisis, and it seems to be going to other currencies that benefit from this. In addition to that, euro and Brento is quite linked to each other, but Brent is really the contract for Europe. So I think that's really what's playing there, Guy. It's maybe not so much about the flight out of the dollar, but I do think it's related to treasuries, that if treasuries get more under pressure, the dollar will likely get weaker.
Going to a different economy, and we're going to be learning more about that as we go, but clearly we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we can have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting at more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told his members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy. And you know, when the dealers have to step in to save a Treasury auction, that's a rare occurrence. And
Cryptoteacher and the new World Order book, plus the 3 kids books, is time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing they were still getting that free money, what are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate. Not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID stories 3. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.